everybody. Welcome to the closing beat and happy Tuesday to you. How you doing out there? All is good? You enjoying the weather? That's like everything everybody wants to talk about. This weather. The weather's beautiful. I would agree. We are financial advisors here at Jazz Wealth. We are not specialists in the weather. However, we do know numbers. That's our thing. We are one of the only advisors set up to where we only grow if your account grows. Simple as that. We have nothing to sell. We don't have any sales pitches. 100% fiduciary. Hope you'll check us out at jazzwealth.com. You can schedule a call if you'd like to chat with us, see how it works. And one day we'll have a sales pitch, but currently we lack in that department. So get it while you can there. Do we have a Guess the Dow leaderboard?
Visually, no.
Visually, no? All right. So Cody's going to tell us who's in the lead here.
Yeah. Your top five for today are ENF, John, Peter, Jerry Lou, and Saniha. Those are your leaders for today. Jerry Lou, haven't seen him in a while.
I love it, man. In there, ready to win it. You can play jazzwealth.com/guess the Dow if you would like to play. And not a lot of people playing, so we're going to keep doing it anyways because it's sort of automatic. But if you want to play, there's no sales pitch, no strings attached. You can play. If you win, you get you got to be the closest without going over. But if you do, we'll send you a $100 gift card. Or if you'd like to have it credited to your account and you're a client here, we can do that as well. While other advisors are playing checkers, we are playing chess here. And one of the cool things I like to focus on is, hey, you're about to retire, or you're really close to whatever goal you've been saving for. Let's solve for that first couple years. What do we need to know? And then let's go on beyond that. What do we need to know after that? Like, how do we actually space that out? What do we talk about? Social Security and Medicare, all those things that can get into the way, Roth conversions, whatever happens to be for you. How do we work through that? So think about that. What's going to happen when you retire? Where do I take my money from? How do I do things there? All right, on to the stock market here today. The Fed members, we talked about that yesterday. A lot of Fed members talking, well, they talked today. So a lot of them going there, and they're changing their tune a little bit. Did you catch it? The Fed members, as they speak, this is how they do this, by the way. They just start changing the words a little bit to give you a heads up. Why can't they just say, hey, this is where we stand? It's not that easy, I guess. But now they are consistently using the words that higher bond yields may mean less of a reason to further raise rates. Meaning the bond market, right? So if we go over here to the bond market, we take a look at this. Oh man, bond yields are falling apart here in terms of price. And so yields are higher than they thought that they would be. So they've lost a little bit of control in the short term. That's fine. Nobody's complaining about that. And so now they're saying, well, these yields may do the trick for us. So instead of saying, how high are we going to raise rates? They're starting to say, how long are we going to keep rates high? Right? So those are the ways they're changing the words. Like, how high are rates going to have to go before we need to end up, pausing or slowing things down? That's all out the window now. Now, one by one, as they gave their speeches today, they go, how long will rates need to remain high, given that they're already kind of high, to achieve our objective? So really, really cool there if you follow what's going on there. And of course, that helped out the bond market, at least over the last couple of days, that little transition to, hey, you're not going to raise rates much more. That's great news. Elsewhere, we have to talk about the Israeli thing going on there. The Iran involvement is really the only focus for the stock market, right? And that, you can have your political beliefs, and I don't really follow every little thing that's going on over there. But as far as the stock market is concerned, that's what we're looking for, right? More, if Iran was involved, remember the Israeli defense minister initially said there's no indication that they were involved. Well, they changed that. So now they've changed their tune, just like the Fed. They're changing their words there to now saying we didn't initially think there was involvement. So they're not saying 100%, some of them, but the main characters there aren't saying we're 100% sure on this one. I'm sure we know the answer. They're just not sharing it with us there. And that's where we stand. So when you look at like the oil market, go over here. Oil market. See how that has no real indication of what to do next? When you look at the defense stocks, remember they had a crazy day yesterday. You see how they had nothing much to do today, right? Lockheed Martin. We look around, started a little higher. I was like, wait a minute. Is Iran involved in this thing or not? That's it. That's what the market cares about. That's what oil cares about. So if you're curious how that's going to go, I hope it goes better than what the world is projecting, but I can't control that. The S&P here today. It started off continuing yesterday's momentum, right? So good news there. Nice little oversold bounce that we've been talking about coming your way. Then it got a little bit weaker, and it actually all happened right in one shot. I'm going to try to share this with you right here. It took less than 5 minutes. That was the initial weakness of the day. I'll give you 10 minutes, right? So within 10 minutes, bam, right? As soon as the European markets closed and everything, and that was it. We couldn't get anything done from there. So for a stock market, we spent all morning, yay, momentum, 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 and then in 10 minutes took it all away, and that's basically how the day finished. Nonetheless, we still have a positive day, not too big there. So no problems there. I do have something to point out to you here. We're going to go this way just a little bit. He's sneaking a picture, little guy. So unless you are a super short-term trader, swing trader, whatever you want to call yourself there, this is more just for feel of the market. So actually on tonight's Jazz After Dark, right? Tonight's Jazz After Dark there, we're going to talk about that feel of the market, the personality. So what I'm about to share with you, it's a little bit in that context. I'm not saying anything's changed here. I'm just kind of pointing out something interesting. This is not normal. What we're seeing now is just for fun. Here, if you look at the S&P's total return by day, and we're using the SPY here because we can go back to 1993 when it first came out. What percentage of the total gains came from each and every single day of the week? So, for example, since 1993, 66.5% of the S&P's returns happened on a Monday. Well, 175.6% of the returns happen on a Tuesday. So Tuesday's clearly the best day, right? And that's normal. Tuesday, Wednesday are your best days in the stock market there, right? Initially, they tend to pull back if on average, and then you see the gains come from those days. If all you did was invest on Thursdays, I don't know why, but if you bought the close on Wednesday and then sold the close on Thursday, you'd only have 20.1%. And if you were a Friday investor only, again, I don't know why you would do this, but if all you did was invest on Fridays and then sell like right at the close or first thing Monday morning, no, this was the close. So from the open to the close, you'd have a loss since 1993. That's not cool. Is that 30 years? All right. So 30 years of investing, you'd actually have a loss of 15%. I point this out because so far what we're doing is we're seeing something different. Tuesdays and Wednesdays this year have not been the best days. They've been the worst days as a whole. So what we did, we came over here and said, okay, let's just add up Tuesdays and Wednesdays of every single week or every single year, and then go back and see, is this normal? What's going on here? So as of last week, because we haven't hit Wednesday this week, on Tuesdays and Wednesdays, the combined return is minus 0.23%. Slight down day. Not a big deal, just a slight down day. However, you can see that's actually really odd. And you know that from the previous slide, right? Normally, Tuesdays and Wednesdays have a nice gain throughout the year. It's consistent, right? That's where the action's at for the most part there. So it's not normal to see Tuesdays and Wednesdays so weak. So that kind of leads into what happened today. Market started off strong, and then it got a little bit weak. It didn't finish negative, but we sold off a lot of the gains. If tomorrow's negative, we go, what's the deal with this market? It's been really predictable this year because a lot of what has held true and is either normal or odd in this case has stayed that way the entire year. Tonight on the closing beat, I'm actually going to go through all the year stats. We're going to go through everything, and I'm going to make it really simple to show how you can see the market is actually being very predictable at this point. It's not going to stay that way forever, by the way, but just kind of a fun thing to look at. So I thought I'd share that with you. All right, looking around the markets here, I'd like to point out utilities have had, that was the most oversold sector in the market. There's 11 sectors in the market. Of course, that was the most oversold. However, they've had the largest rally from lows to highs. Not the largest rally like in the last 5 days or whatever, but from the bottom to where it stands, utilities have had the biggest rally there. That's a defensive area. So you're like, okay, are people picking on the bottom here, or are they getting defensive? Consumer staples is another defensive area. People have had no interest in that. All of a sudden, Israel war, oh my gosh, it's chaos, right? People want to be defensive. It just so happens that they're oversold at the same time. So I don't know which one it is. It's too early to tell on that one there. Now, this is different because it used to be, and I'm not attaching this word, this is just an example. Technology and communication services this year have sort of acted like the defensive area of the market. They are not considered defensive. I'm not saying anything's changed there. Just when times got a little rough, where did the money go? It went to tech and communication services. Oh, I want to be in my NVIDIA, my Netflix, my Alphabet, Apple, Amazon, Tesla, right? And we know that. Oh, I wasn't planning on showing this here. Let me see if I can grab it real quick. We know this because, man, can Eric have like a different thing where his stuff is at? Jesus, a lot of kind of stuff there. Okay, we know this because the top 10 S&P contributors account for the majority of the year-to-date gains. So I shared this at some point. I'm not sure if I shared it here, but Apple, 75 percentage points, 75 points in the S&P have come from Apple. Look at the names here. 457 points this year, as of the last time I shared this, came from these 10 stocks. If you look at the rest of the S&P 500, it's only good for 60 points. Okay? So when we look at things like that, you say, well, wait a minute. Wait a minute. Hold on just one second there. Let's see what we're talking about here. Defensive. People have been saying, oh, when things look a little bit weird, I'm going to go to get defensive in non-defensive areas. But the point is, that's changing. You got oversold defensive areas to participate in, and people have clearly been putting money there. All right. I'm done with that. We talked about oil already needing more information, right? So oil's kind of saying, what's going to happen here? Is this like going to solve itself? I don't know what that looks like, by the way, but is this somehow not going to be a big deal? It's a huge deal. I don't know how we just walk away from this, but we're trying to gauge the level of involvement of Iran in whatever this turns out to be. World War III, just, people shooting each other, de-escalation. I don't know. I'm not getting into that camp because I have no idea how that's going to go. So oil needs more information. Bonds obviously coming off lows. A lot of people starting to suggest that was a bottom. They would have been wrong the last 3 times. I even said right in here. No, right in here. Kind of looks like bonds are trying to bottom out. Yeah, I was a little off, and this could still be a little off. Remember that when you look at bonds compared to everything else, you have a 50% pullback. And from highs, not for the year or anything. So go to 2020, 50% pullback. Has that ever happened, I wonder? Can you see that? Let's try something here. What's that been, 2 years? Probably not. No, we know it's never happened. It shows on the other screen there. Let's see how often it falls, 25% in a 2-year window. Not even 2 years. Let's go 18 months. So I'm using the research site here. This is totally ad lib. I wasn't planning on doing this. I'm going to go 30 years because I know we can't look back that far for the TLT. Is there anything here? You got April of 2022, we fell 25%. So this is nowhere near normal. Look, we got one data point here. We were up 30% going into that. We fell 25%. So it's also being illustrated here. But look, this is just nowhere near normal for bonds. So you come over and look at bonds. You go, well, now I'm going to get a, let's call it 50% discount and a 5% yield on a 10-year, or somewhere around there on the 10-year there. Kind of cool, I think, anyways. All right, I rambled a little bit here today, going a little bit off the reservation. Pepsi, turns out Barron's was right. Talked about this yesterday. Barron said this is going to be what wakes up the stock. It helps that it was oversold and really, really, really extended. Better than expected in terms of earnings overall. And they raised their guidance going forward. Organic growth is where we're looking for the action there. I don't think it quite came in at 10%. I shared with you the other day. Stellantis is laying off 500, 600, almost 600 more people thanks to the strike that's not getting a lot of attention right now, probably rightfully so. You've got Unity Software losing their CEO, not one we normally talk about, but that's the kind of stock individual news there was today, so a little bit tough there. And Honeywell gave you a little heads up as to their earnings, what to expect. They essentially just told us, so if you're curious, that's where it stands there. Okay, the Fed members don't stop tomorrow. We have 1, 2, 3, 4, 5 Fed members speaking tomorrow. We'll get the Fed minutes at 2 o'clock in the day there, but separate from that, it's not normally a market mover. So we got 5 Fed members speaking. Let's see if they continue their discussions on how long do we need to hold high rates there. That could be a sizable shift to give us an idea of what that Fed meeting is going to look like. Remember, they will soon go into their, and I'll take your questions, by the way, as I pop this up while I'm talking. They'll soon go into their blackout period. So we're hearing from them now because they won't be talking leading up to the Fed meeting there. Have you ever seen that guy, by the way, on Instagram or whatever, where his this is not a suggestion, but they're like, you know, you travel a lot. And he's like, yeah, I travel a lot. And I go, well, where you been? And he goes, I got a strategy. Every time there's like a terrorist attack or there's some sort of bombing or whatever happens, I book a plane ticket and I go there, you know, after you're allowed to go there, because no one wants to go there. It's cheap. I get all the tours basically to myself because nobody's there. And security is as tight as it can be. And they all laugh at him because that's like, that's a tough strategy there, but I thought that was funny. You're confused why the chart adds up to way more than 100%. Ooh, point me to the chart. Oh, maybe you mean this one here? Talking about this one here? I'll leave it up while you answer there, Chris. On the bright side, we're building a wall. I heard about that. Yeah, 20 miles of a wall, huh? Pandemonium says, so they are saying no more rate hikes. No, they're not saying that. They're just changing their language from how much further do we need to go to how long do you think we need to leave rates here? So it's kind of like a hint, you know, they're getting into that. More to come tomorrow for sure. And that's really the day because there was a bunch of them talking today. And it's like, oh, y'all are kind of saying the same thing. You made sure to get your little blurb in there, huh? See if they do that tomorrow. Target bounce. Do you like your target? Super discounted. I don't know. I can't say, you know, dive in there and have a good time, but there are certainly other people that are doing the same. Volume a little bit suspect to me. There's not a lot of action there, and you got to weigh your risk to reward. I'm just going to say it. So you got to weigh your risk to reward. If you decide that this is something you want to do, what's your goal, right? You're risking some amount of space, say from 110 to 100. So you got $10 worth of risk. If you get up to 120, it's a 1-for-1. You risked $10 to make $10. You can't make a living if you're a short-term trader, investor like that. You can't make too good of a living if you're 1-for-1 unless you are highly accurate. Yeah. Any idea what triggered the drop in the S&P? No, I saw the European markets closed. I thought maybe they said something, but other than that, it was just kind of done. Yeah. Any guess on the inflation numbers? Both headline and core likely, they're going up, right? So it's just because of the math model. So this doesn't change. They're going up, but that's just because of the model. So we will see what happens. I saw rents are predicted to be down. Remember, rents have a pretty significant impact on CPI, inflation numbers. So rents going down helps it out. Still going to have a higher number, but kind of cool. Yeah. All the banks are really pushing the high yield savings accounts. Well, I don't blame them. It's really competitive. And when people are moving money out of their basic savings accounts, banks got to do something. I saw Bank of America the other day went from like 0.95 to 4. Like just overnight. They gave up and said, okay, we got to do it. We got to give them the 4%. Boogers. Wait until the last second like that, huh? What do you think about Plantair? What do you want to know about it? Do you own it? Give me some news there. Unity, you like it there? I know you guys are big on that AI stuff. You AI Bitcoin people there. CEO left the company. Usually in the short term, that is good news. And that did happen today. It sold off a little bit. But that basically is your CEO pop right there. You tend to see that, which is odd because you wouldn't think that, I mean, they're different, I guess, but you wouldn't want to see like, I mean, we saw it with Disney, I guess. Yeah, but you wouldn't want to see like a long-standing CEO just leaves. If everything's good, where's he going? Right? Unless he's just retiring or something. Yeah. Little buggers. That's just me being nice, you know, using the nice words because somebody around here won't let me say what I think. All right, I will wrap it up there. Jazz After Dark tonight. If you want to hang out with me, grab a drink. We're going to talk about all that data, show you how the market is just being itself and how to determine the differences there in case you want to understand when things start to wake up and it gets a little mad, grumpy. All right, enjoy the rest of your evening. Thanks for watching, hanging out with us, and subscribing, and all that good stuff that I'm supposed to say. You enjoy the rest of your day or week, and we'll see you later. Adios.